you, Aditya, for giving a wonderful introduction. It's been always a pleasure to have associated with your entity, and we have had many panel discussions before. And in fact, I'm very happy that Kiran and Naman actually agreed for this panel discussion. Both are stalwarts in their own way. They've been startup founders. They've achieved a lot, and it's going to be a very, very interesting discussion. And looking as you all are, I'm also looking forward to it, and very, very happy to moderate this panel. And Kiran, hi. How have you been, Naman?
All good, Raj. Thanks so much.
Okay, good. Thanks a lot for actually agreeing to meet. I think hope you're still in Goa or you're back to Bangalore.
I'm still in Goa.
Okay, great.
I'll be there in a couple of weeks. Yeah.
Okay, great. So the first question is for you, Kiran. You've been a client of a family office and also an entrepreneur who's been dealing with a family office to raise funds, and also for dealing with VC funds also to raise money for your enterprise. How do you see the role of the FOs play on both sides of the ecosystems, as both as founders and investors?
Yeah. So I think good this one, and I think, as you know, Raj, FOs are not usually in the first line of consideration for most entrepreneurs when we are raising money. You know, the VC guys make a lot more noise than you folks in terms of saying that, hey, we are actively looking, and they usually also have a lot more, I would say, associates actively headhunting down kind of startups that are probably early stage to kind of invest in. But that said, whenever, at least in our case, and in my own experience, having dealt with both the traditional, in my case, social impact VCs, as well as with the family office side, the family office brings in, I think, very different perspective to this. And specifically, I have loved sometimes the patience that the capital can be brought in if there is alignment with the investors of the family office. The mentorship and the quality of mentorship, I think, is very unmatched, because I think the many of these family offices are usually backed by actually very successful entrepreneurs themselves, who have extremely strong points of view as well as strong viewpoints. So whatever little time and advice you can get from them, I find is far more valuable, and that's unmatched, because the VCs and the traditional VC circuits are usually not able to kind of bring that kind of leverage or the patience. And so I think I do think that more entrepreneurs should experience the power that family offices can actually bring to the table. And I think also in terms of values, the conversation is very different between family offices and VCs, especially in certain kinds of businesses like the one that I am in. It's not a traditional high growth easy business. It was a conscious decision to kind of go and try to see how we can do good as well as deliver high quality and sustainable, say, eye care in our case, in difficult rural markets. And so I think without the backing and the support that, say, the FO was doing, it would have been actually quite tough for us to also convince others. So I think the combination, the fact that there was a strong backing from a family office who understood the value system, the patience of the capital, also helped in also bringing and aligning some of the social impact and investors in our case. So I think that's been extremely interesting, Jen.
I agree with you, Kiran. In fact, particularly when you spoke about the mentorship, I think it's been a very, very important point what you brought up, because I think VCs being VCs, they are always looking for kind of a quick returns and basically some kind of an exit. And they're very dispassionate that way. Whereas a family office is very passionate when they invest into a particular concept, because they know the promoter, they know how sincere they are, the kind of impact what they can create. And particularly in your case, it's completely impact investing, the kind of what is a social re-engineering, what you're trying to do with the healthcare in some of the I myself have seen the kind of rural areas where you guys work. It's a kind of an experience. So a family office investor, when he's investing into such entities, they really feel they belong to, and and through you they're able to touch many lives in a very successful way. So I think it's a kind of a right point of view what you brought in. Um, uh, I would like to ask both of you, but I would like to move to Naman now, just to understand. So the Indian startup ecosystem has progressed over a past decade. I would say more about 7 8 years. And but where do you still see the gaps?
Sure. Thanks for your question, Raj. I think, Kiran, you covered substantial ground in your opening remarks. I think in terms of the gaps and therefore the opportunities for this year, particularly since we're talking in Jan, um, in my mind are in four areas. The first is, the nature of problem solving. I think the kind of problems that Indian entrepreneurs and startups have been solving, we're going to see a lot more innovation and inventiveness about what we are actually going after. So that's one thing I'm really looking forward to in this year, because there's going to be deepening of expertise and experience and the kind of things that we do. The second vector that's very interesting and pertinent for this conversation is the nature of capital and the extent of capital. I think we are going to see both broadening and deepening. Broadening in terms of the sources of capital that are available to the Indian startup ecosystem and to Indian entrepreneurs who are going after very interesting use cases, and of course the extent of capital. I mean, we are already close to 2 dozen unicorns, and in the next few years we're going to kind of hopefully hit a century as far as big firms or big startups are concerned. So it's going to be a fairly interesting year for the nature and quantum of capital. Third, I think, is the enabling mechanisms, the kind of individuals and talent pool that's available to startups and entrepreneurs. Suddenly, because of, the COVID situation, a lot of firms have moved to the work from home model, and startups are no longer constrained by who's available in the vicinity or where they operate, but are looking at a talent pool that's global in nature. So a lot of interesting perspectives from the human resources perspective that are kind of coming in. And finally, the last vector that I think is also very interesting is unit economics. I think there is a concerted move as far as entrepreneurs and their backers are concerned to look at profitability as a North Star. I think, in the early years, it's all been about, the thrill of entrepreneurship, the glamour of entrepreneurship. I think some of that noise is kind of coming down, and people are getting serious about building sustainable businesses. So I think these four areas, Raj, in my mind, are places where there have historically been gaps, but I'm very optimistic about what we are going to see on these four fronts this year. Just to sum it up, first being the nature of problem solving, kind of capital, the quantum of capital, the enabling mechanisms for startups, and finally, the unit economics. I think those four areas are ones that I'm looking at.
Thanks, Naman. So I would like to pick a point from your 4 points. Basically, you spoke about enabling, particularly when you talked about COVID and post-COVID, people are working from home and all that. But do you think it's sustainable for long term? Because I keep hearing not so good stories about work from home, which has been happening with many. Like people, there's no there's a very thin line between work and home, and most of the time what do you say, perplexed, getting overwhelmed in terms of managing both the domestic as well as the professional commitments. And people are raring to go to offices. And being in Bangalore, I can see the kind of roads are full now. In terms of the past 2 months, I'm seeing every day the traffic situation is getting worse. So that means that there's a lot of people who are going out and going back to offices. So how do you think it's going to sustain in terms of, do you think this work from home is permanent, or it's going to be a hybrid model? What do you think?
Sure, Raj. Look, I have a slightly different perspective on this. I mean, firstly, on Bangalore traffic, it takes very little for Bangalore to start cracking or Bangalore's roads to start giving up. So I think, that unfortunately, whether we decide to work from home or not, will continue to be the case. As far as work from home is concerned, Raj, I think it's actually a fascinating litmus test for the kind of culture that companies have forged. Because companies that have a high degree of trust among their team members are finding it easier to migrate to a completely work from home model. And of course, not all businesses are architected, not all functions are architected in a manner that they'd be conducive to a work from home situation. But what I'm noticing is that teams that have a high degree of mutual trust are managing very well with work from home. They're able to kind of work asynchronously, which means that if they don't have the pressure of tight deadlines and they trust each other to get work done, they are managing to find time. It's no longer kind of the oppression of a meeting hour. Or the compulsive need for everybody to be in the same room or huddle around the same table. So for certain companies, it's worked very well, and I think they're going to stick with it because they're seeing a number of advantages. And I think we're going to see the rise of remote companies in this year and henceforth. There are already examples around us. GitLab, which is, I know Kiran would be aware of GitLab since both of us, have a background in tech, which is where we store all our code, etc. It's now owned by Microsoft, but a major startup. They have managed to build a first-rate company with a completely asynchronous remote model. There's another very interesting company called Todoist. They have two fascinating products. One is Todoist itself. The other is Twist, which is like Slack. Again, a remote first company. So they're also a completely work from home company. So there are several examples of this sort and increasing in number where companies have been able to manage. But at the same time, I'm conscious of the fact that not everybody is as nimble as some of us. They've had different models in place for a long time. The demographics are very different. I mean, we're a young firm, so it's easier for us to embrace work from home because everyone's always on using several tools which make coordination easier. But if firms have a mixed bag when it comes to the demographic mix, if they have to be out in the field performing certain operations, it's not easy for them. So I think you hit the nail on the head when you said, is there going to be a hybrid model? I think we are moving towards that. There's going to be significantly greater flexibility when it comes to giving people, the elbow room to build their own kind of culture, number of hours, the manner in which they work, so on and so forth. So I think the best thing to come off this period is the fact that there's going to be a lot of liberalism when it comes to architecting a work culture. And I think that's by and large a good thing. But there's no cookie cutter model which is going to work for all firms. I think we're going to see an explosion of asynchronous work tools, and we're going to see great flexibility. By and large, a good thing. But I'd love to hear what Kiran feels about this, because he, of course, has a business where there's a great degree of real world engagement.
Yeah, so that's absolutely true. So there are some businesses which you cannot really adopt it. Like I run eye hospitals in rural areas. You have to have a physical building. You better make sure the doctor turns up there physically, and it's actually quite hard. And I've tried delivering telemedicine for ophthalmology, and it is non-trivial. And I can tell you, because both in terms of the cost of the devices, to be able to, eye is actually, if you're becoming a doctor, the second thickest book when you specialize is actually on the eye. It has more number of diseases and actually quite complex in terms of the kind of diseases. And investigations require fairly sensitive equipment, which are not going to end up on your smartphone anytime soon. So I do think that will happen. Another example, I think, Raj, is to, this is not black and white. And I think we can look at demonetization as an example. Demonetization did provide an impetus to digital transactions. So probably a lot more people, and we saw month after demonetization, there was a significant growth of digital usage. But it doesn't mean that we stopped using cash, right? So cash will continue. So there is going to be this hybrid. And as Naman says, I am seeing the same trend, that companies which have the ability, so because the business allows it, they have the cultural ability to manage it. I think both of those are two important constructs, right? So, the business should allow for it to go remote. The cultural ethos of the company should allow for people to work in that element. Those companies are definitely taking advantage of, the COVID really pushed them very quickly over to this, work from anywhere kind of a model. And I think they're loving it. I think I've seen companies as large of, larger than $100 million making calls saying that, look, we are always going to be a remote workforce. And they're coming up, their HR is coming up with new ways by which they can keep the team bonding and building along to kind of keep this thing going. So you are going to see, I think, more of it, but it's, there is still going to be a lot of people on the road going to work for sure.
So, Kiran, interesting. In fact, just wanted to know your views on what would be the suggestions to the government for improving the kind of operational environment for startups?
So I am not the real expert on some of these areas, Raj, as you know, and I think last year and in the industry we have had a lot of problems with this angel tax that kept going. So the wishy-washiness of sometimes the rules that come in and what it does on the startup industry. Now I think there are two parts, right? So one, I do think that generally in the last few years the government and the industry has done a lot, which is one of the reasons why you see a lot more number of startups, a lot more money going into the startup world almost consistently year after year. So that's a clear indicator that there is kind of a positive traction already, a positive environment which is encouraging entrepreneurship, which is encouraging people to take the risk and start up in India. Because without which, and of course it may be contained to a few cities, contained to a few markets, but I've seen some excellent examples fostered by the government in, say, for example, Kerala or Rajasthan. Fascinating initiatives they have done for incubation in terms of co-investing along with angels, giving free space to startups. It's quite impressive, giving free cloud credits to startups and so on. So I think generally what I hear, as I deal with some of these people in government is there is a positive inclination towards making sure that, the startup world ecosystem is encouraged. And you can see this, in terms of the Startup India program and so on. And you should know that, Naman and me both are part of a voluntary organization called iSpirit. And iSpirit came up with something called a Stay in India checklist. They analyzed all the different rules that are actually holding back entrepreneurship, because there was a small period of time when all this regulations were a bit in flux, that some of the new founders started incorporating in Singapore or in other places because they didn't want to incorporate in India. They felt that the Indian system wasn't really conducive. And so a lot of work was done. And what's very interesting is that last I checked, and I don't know, Naman, if you have the latest update, up to 25 of those 40 items that they came up with had been ticked off and actually taken care of by the government. So really positive response. But if you're really interested in this space, since I'm not the expert, I can have the Stay in India checklist and an update circulated, which you can send around so people can understand as to what we had identified back then as barriers that the government had to do. Naman?
No, absolutely, Kiran. My recollection is around the same number, which is 24 items were roughly checked off from that list that we had made a few months ago. And I echo your sentiment, Kiran, in that the government has been extremely responsive. They are usually late in terms of realizing what the problems of an upcoming community are and architecting solutions that will have longevity and will actually bring real benefits to all stakeholders. But once they do see the light, I think they have a methodical way of going about addressing constraints if presented to them, in a comprehensive way. So I think they've been extremely responsive. I just hope that we go beyond some of the hygiene stuff that they've done very well. So for instance, today, if you are to register as a startup with the GOI, it's extremely straightforward. You just go online, you submit a set of documents, fill a few forms, and within minutes and days, you get all the certifications that you need to be, a registered, recognized startup by the government of India. However, in terms of real benefits accruing to us, just to give you an example, recently there's been a 1,000 crore fund that's been announced to support startups. Now, If we were to kind of ask ourselves, how do we actualize that? How do we participate in that process? There's very little by way of detail that's available today. So they just need to kind of, I think, focus a little bit more on delivering the benefits that they hope to deliver to startups. But the heart is in the right place, and I do hope that with time the execution improves.
Thank you, Naman. It was very, very exhaustive. I think Kiran also gave a lot of good points. Just wanted to pick your brains on what is the key differences which you think are when you raise money through a family office and through a VC or an angel fund. In fact, this question is for you both. You can both probably give your point of views.
So anyway, I'll kind of go first on this. And I think I kind of, in my opening remarks, I shared some of this. So for me, from my personal experience, the number one thing for me has been, the patience in the outlook itself, because most funds almost always approach you from the perspective of their fund timeline. So usually when I'm starting to talk to a fund and they say they want to put money in, the first question I'm asking is, how long has it been since you got this money? How quickly is the pressure going to be on me to start? When will you start putting real pressure on me to start giving you an exit, right? So I think that's for me been the biggest difference, because there is this, family offices can operate, and if they want to, on very, very differing mental timelines. And I think there are several businesses that really require that. I think the second has been in follow-on. I think if you, over the period of that initial engagement with a family office, you see that the family office as well as the investor behind the family offices develops a certain level of trust in the enterprise and the entrepreneur. They are actually very proactive in being able to do follow-on rounds. I think the reverse is also true. If they lose the trust, I think they also back off pretty fast. But fundamentally, I think if there is trust, I think I've seen faster decision making on follow-on rounds that kind of happen. The third thing for me, and I spoke about, mentorship, big value that we see, at least I see, that family offices, and I think family offices should promote that more, and also work with their investor community to make that available to the entrepreneur community that they are kind of representing. I think it's a humongous value that I can promise you that no VC fund can really match or bring to the table, and that's something that entrepreneurs would actually gun for, just to get that on board into their own companies. And lastly, from my perspective, I think I sometimes find the VC community far more financially oriented. Especially for me, I run an impact business, and I would like to see more balance in terms of how expectations are on what the business is attempting to do. And I see that more in the family office side than I probably do on the VC side. I think, even though, and I don't know if there are any VC social impact VC funds on this call, but I've been sharing this with most of these impact funds that I meet with. I think the word impact is losing relevance, because what's happening for them, or what has happened in the social impact VC space, is that since between 2000 and now, the minimum IRR expectation has only gone up by several percentage points each year. So they're starting to look far more like traditional VCs than anybody else in terms of how it comes out. And so that reflects in terms of their engagement and their reviews and their expectations of the company in how it plays out. So I think there's several things. Therefore, there's a huge value that I see that FOs can actually bring into the entrepreneur cycle, especially for a whole class of businesses that are there. I think on the other bit, like I said, FOs are not usually organized for this game. VCs are far better structured to kind of deal with sourcing, say, potential prospects, doing valuations, being more aggressive probably on exits than FOs are. So I don't know actually from the FO perspective and from the investor perspective how that plays out, but that's been at least my viewpoint, Raj.
See, actually, the last point, I think FOs who are very experienced in the area of unlisted investments are clearly geared up for in terms of when you're talking about whether exits or whether follow on or anything like that. Because in our own experience, we have we wear like two hats in terms of we also identify some of the unlisted kind of an investments for our clients, and where we have raised money for some of the unlisted companies, where we are continuously working with the companies to ensure saying that the value is realized at some point of time, because we are responsible for the investors, because we have recommended those investments to the investors. So we are that way we are extremely careful in terms of how we kind of handle that portion also. So it depends on the family office whether how deeply they are entrenched in terms of this asset class to understand the space well.
So that was my point, that if as a family office you're going to get into the space, I think you need to treat this like an asset class for which you need to probably get people in and actually have dedicated set of resources to manage it.
Very true, very true, very true. Naman, your thoughts on this?
No, I think Kiran's covered this extremely comprehensively. All I want to say is that, look, in my limited experience, as far as VCs are concerned, and this is not so much a value judgment on the VC community as much as it's an understanding of their reality. They tend to have this herd mentality. Thematically, for instance, if food tech is something one of the large VCs has spotted as an area of opportunity, you will see, a dozen different VCs go after that space. So there's a single hypothesis and everyone tends to kind of follow that hypothesis. And because of the constraints involved that Kiran mentioned, that capital tends to be expedient. There's a purely financial lens applied to it. It comes with its own set of conditionalities. Entrepreneurs like Kiran and I would be spending 20 to 30% of our time just adhering to a certain set of compliances that VCs want us to. So it's perhaps not, for certain industries, great, but for a large set of entrepreneurs who are trying to do something unorthodox and want patient capital, it's probably not the right place to go. With FOs, at least our experience has been that, the nature of the capital is that, it's there for you and with you for the long haul, as long as, of course, you're kind of meeting all the conditions that the investor set forth. There's a great degree of empathy. These are entrepreneurs who've been in the trenches before. They understand how easy or difficult things can be, and tend to kind of stick with you even if there are certain downturns while you're building the business. There is a great degree of lateral thought. I mean, we've dealt with your family office, Raj, or your entity, and I think the set of individuals that generally work with us, they have diverse backgrounds. They've dealt with all kinds of sizes, various nature of industries. So the kind of questions they have, the kind of preparatory work they make us do, really prepares us better for what is to come. And I think, just in terms of the horizons, not only are they longer, but they are broader. And I think that lateral thinking is something that entrepreneurs tend to prize a lot. So, those would be some of the differences that come to mind as we think about, distinguishing between the two.
Naman, so basically, do you think entrepreneurs are too busy chasing the VC tree in terms of
Certainly,
saying
I think
somewhere ignoring the family office route?
Yeah, well, it's an awareness issue. Again, I'm not going to kind of blame them for not looking at this avenue, because they're scantily aware of it. So once there is greater awareness, and forums like this help in building awareness on both sides, I think they'd be better served, because there is a certain glamour attached to having a big ticket VC firm back you. You're going to make it to TechCrunch or Your Story or some other publication that has a lot of marketing value attached to it. So a lot of people tend to get swayed by that market. However, I think if you're going after quality capital, if you're in this for the long haul, if you really want to work with people who share your vision, who are going to kind of serve as a super board or super sounding board, then I think they ought to be looking at FOs. And I would agree that, because of lack of awareness, a lot of entrepreneurs are missing out on the several, pure advantages as well as relative advantages of working with FOs.
Thank you, Naman, for this wonderful thought. So, Kiran, this question is for you. How have FOs made life easier for you as an entrepreneur? How can, and this is a follow-up question also, how entrepreneurs can leverage the expertise that is available with the investor FOs?
Yeah, I mean, I think usually like FOs always make it easier when they pay, when they invest in you and they give you the money. So, most of the time, the first time when we are dealing with FOs is because, we are starting to look at capital. But I think I've always found that the width of experience that the FOs have also because of other asset classes. Many of you, like especially in your team also, Raj, I've noticed that sometimes because they participate as observers in board meetings, and I usually invite and always bounce off many strategic decisions that the company is supposed to take with your team, simply because I value the width of exposure that you have. I think what happens when you are probably running a family office is that you also kind of see a lot more variations. So you're looking at you're looking at different asset classes and different kinds of markets, and so I think people seem to have kind of a view on how businesses happen, and also there is a far more understanding on the cyclical nature of certain things sometimes, simply because probably markets also tend to have this behavior and this one. So I really value that part of the experience. Most VCs always tell you that they'll give you more than money. It's very hard for them also to deliver on that expectation. Generally, it's a fact. I mean, it's
a fact.
It's a real fact there. And the reality is that usually entrepreneurs know the problems the best. But the other bit that I've always found was also very useful has been the networks. For example, as a small entrepreneur or a small business, you need many other things that need to get done. Whether it's evaluation at some time, you want an audit done, you want somebody who has an expertise in, say, some supply chain or some sourcing and so on. So normally the start point is you reach out to your peers, but you also reach out to your investors, your mentors, and your FOs. And I think even there I've found the fact that I think you guys try to provide a wide width of services to your clients, put you in a pretty good place to have an interesting network that has also been very helpful for me as an entrepreneur.
Naman, your thoughts on this, please?
Sure. Yeah. Look, I think again, because Kiran has significant experience over and on me in the same field, dealing with the same investor and investor office. I'm going to end up echoing what he said. But I think FOs are perhaps the most supportive partners you can work with in your entrepreneurial journey. I think the kind of empathy that they bring in is unparalleled. I think the onus, of course, is on entrepreneurs as well to treat them like team members and not just kind of go to them at occasions when you need to go to them. And I think that's what Kiran alluded to earlier. FOs aren't folks who are going to intervene in your day-to-day life, which perhaps VCs will. So the risk on the other side is that you take the capital and then you only kind of do what's required in terms of statutory compliances, but not make the most of the wealth of experience that's available at an FO. So I think the onus is on entrepreneurs also to kind of go to them regularly, treat them as extended team members, calendar meetings, so on and so forth, and make the most of what's available. But I think, at least for us, and we're a significantly younger company, the family office that works with us is really a super board, which is always available, which is also extremely instructive in terms of what's happening elsewhere, because they're looking at other startups, other industries. They've seen how journeys play out, very well versed with trajectories at different stages of a company's growth. So comes in extremely handy.
Thank you, Naman. Thank you, Naman, for this what do you say, expert view. And so, for the benefit of everybody, just wanted to just saying that what a family office can do in terms of helping startups. As a person who's been instrumental in setting up a multi-family office, I would say family office acts as a provider of capital. Basically, we do all stages of the company's life cycle: angel, seed, early stage growth. So we have participated in almost like every business in terms of the startup environment, and basically we can deploy for longer tenors, like all of you echoed saying that patient capital. So it's like there is no kind of, we are not compelled to saying that the fund is for 5 years, 7 years, 9 years. We need exits. So typically it's a kind of a very very long term kind of a capital. There's a lot of understanding. There's a lot of empathy, as you said, with the promoters. And once you understand the promoter, once you understand the sincerity, then you obviously you recommend and you stay put in terms of the investment. And in terms of like I said, there's a lot of flexibility in terms of the check sizes. It just, what do you say, it can go from a small check to a very very large check. And risk appetite, of course, is very higher in the current terms of family offices, because typically we ourselves recommend, as a family office, we recommend mostly direct investing of startups than going through a fund, because fund is a basket of investment. So you never, like you always, at times you actually get caught to the pressures of the fund. Typically in terms of some exits, they need to give back the money to the investors. So some of the investments would not have matured, but still you had to exit. So these kind of pressures is absolutely not there at all. So typically investors are very happy, and particularly they also participate in the company's growth, mentor the promoters, give a lot of ideas, what do you say, share their experiences. So that is again a kind of a big, what do you say, support from a family office side. As are some of our investors really work very closely with the startup environment. And what do you say, the sponsors of the family offices, like for example, some of our anchor clients and some of our large clients understand long term, and basically not very anxious about saying that, hey, what happened to my money, whether it's going to come back, when it's going to come back. So these kind of issues is just not there at all in terms of for liquidity. And basically there is startups are not being forced for suboptimal exits, saying that, hey, you need to give back my money. That is not there at all. So there's a lot of freedom among the promoters to just work, what do you say, just focus on their business and not worry about what the investor is going to do tomorrow and surprise them. So that is something which we are very kind of happy as a family office. Of course, human expertise is like really, as Kiran said, saying that we have a very board level engagement. The team works very closely with the startup founders, understands the business. Wherever we can add value, we can add value. And it's like our investors are also like a friend, philosopher, and guide. Basically, they are very closely linked with the promoters. And typically, what do you say? We also provide inputs on corporate governance as and when it's kind of required. Of course, very many cases, the kind of investments what we have made, it's all kind of a great promoters, great people. So there's no kind of a requirement for us to probably advocate, but still, wherever there is a kind of a need, we come in terms of, again, introductions to some customers, vendors, basically kind of an ecosystem. We are always open to do that. And as you said, sounding board for new ideas relating to products and services. So somewhere I think there's a lot of expertise which is getting shared. It's kind of it's a very congenial, it's a kind of a family like growth when you have a very small kind of an ecosystem where you have few investors and a few kind of a startups there. So the ecosystem becomes extremely small and very, what do you say, very productive that way. And in terms of some of the ancillary service what we provide, and as you all are aware, is like we offer shared CFO services for startups. We work with about 4-5 startups very very closely. We are offering where startups have been extremely comfortable palming off most of their work to us. And this has mainly started to help the startup founders to focus on their business, because these are small nitty-gritties which they don't want to get into, where we get involved completely. And of course, treasury management is something which has our expertise, where we focus on managed treasury and legal guidance, of course, because as a kind of a startup advisor, you need to be completely on top of legal, knowledge of legalities when it comes to paperwork, when it comes to some of the terms. So that is where we completely step in. So to sum it up, so I think Kiran and Naman, it was absolutely brilliant in terms of to talk about the startup ecosystem, and both have been great in terms of probably sharing their thoughts and ideas, and uh, very, very, in fact, as both startup founders and creators, great respect for you both, and thanks a lot for coming and sharing your thoughts. I will open this panel, discussion to the participants. If you want any questions to be posed to Karan, to Naman and Kiran, please go ahead and start shooting your questions. We have less time. We have about 2-3 minutes, or maximum about 5 minutes to answer some questions.
So audience, you can post your questions in the chat window. Wait, I don't see any questions. Okay, there's one. Raj, you want me to read it for you?
Yep.
So there's a question from Nitin. He's asking, would family offices have a different time horizon in relation to startup investments from the ones VCs have?
So typically, I would like to answer this question. It's not a very straightforward question because it depends on the investors. So because this is not a fund route, this is basically direct one-on-one kind of an investment. And the kind of comfort which the investor has got with the business, the promoters, the kind of business model what they are in, and how he foresees, and most of them are very much involved in the business. They understand saying that what is the kind of exit which is possible. So typically, if you look at it's very clearly there is no kind of a time frame at all. Time frame is purely investor dependent, and obviously the kind of comfort what we have with the business. But the idea is definitely yes. It's not. Of course, the investment has to yield returns, and it has to come back as a kind of every investor while investing in a startup will obviously look at exiting with a couple of multiples. I'm sure, and that is why he's taking that risk and investing in a startup. But of course, there is no time frame per se. But obviously, it is it can range anywhere between. And family office is something where we are not answerable. The investor is not answerable to anybody. He's answerable to himself. So as he thinks, it deems fit, saying that he can think of even investing up to 10 years, he's not really concerned. Whereas a fund will obviously have restrictions because it's a bunch of investors who have invested into the fund. So really no time frame per se, but of course the idea is to allow the startup founder, give him a free hand to probably explore, innovate, and get the best results possible.
So Raj, I can see 3-4 interesting questions here, but we are really out of time. So would you be able to quickly take them? I mean, like quick short answers for these questions?
Yeah, exit options is basically it again depends on the business, depends on the business cycle. When exactly the promoter is there is an opportunity in terms of follow on. I think exit options are available, and typically it will happen only when the investor sees kind of an opportunity to exit. He will get in. Otherwise, what do you say? It will be a kind of a secondary sale, or mostly it will be a secondary sale to a fund or to another investor or something like that. Yeah, that is the exit option with most of the startup investments.